In a relatively calm and not eventful news cycle, we did see a market rally based on interest rates, and I expect this to continue. If that's the trend, if interest rates fall, the market will continue to rally, but I don't necessarily expect interest rates to continue falling. It's possible they begin to stabilize. A lot of the reason for the interest rate concerns is not the fact that interest rates have gotten up to this level, although that's part of it. It's how quickly they've gotten up to this level. If you look at the chart of interest rates, it's a massive, just swift move, clearly telling you something's going on. But it's possible interest rates begin to stabilize after such a big move. You know, we tend to say, be greedy when others are fearful and be fearful when others are greedy in the stock market. We will see if this applies to the bond market. We don't focus on bonds here. They have been an area of attention for me, except just looking at the broader level interest rate. I'm no bond expert. My whole family is in that field though. So I do understand the lingo and generally what's going on. If bond yields consolidate here, that's going to give us and the market reason to continue rallying. But if that rally, as it was today, is going to be focused more on tech stocks. And tech is fantastic. These areas of the market are fantastic. But I would say take advantage of the cyclical depression you may be seeing today. The cyclical areas in the market are very interesting going into the reopening, and they're very well priced given all the hate they've gotten and being at depressed levels for the past year. Some areas of the cyclical market have been depressed even more than the past year. I'm talking oil and gas. Yet just now, we talked about a quiet news cycle, but just now, Joe Biden has called a meeting with oil and gas and mining executives. In addition, there's been some rumors about this possible $3 trillion infrastructure package. Well, what's that going to require? It's going to require a lot of oil and gas and a lot of mining materials. So I would definitely consider these areas of the market, as it looks like they might have some good government spending pushes behind them. Oil and gas, I'm not sure as much, but you know, they're going to fight for something big. And the recent Texas freeze taught you anything, it's the importance of reliable energy, of which oil and gas is the most reliable. So I wouldn't count that area out. They are all well-priced stocks, typically paying a dividend, trading at a good valuation, and certainly deserving of a place in your portfolio with oil prices this high. And yes, they are not at the highs today, but they are close to that level. And I do not see any reason for them not to continue pushing that if we get a strong reopening. Reopening in a strong economy has typically been good for oil prices because there's more oil consumption. And there's been lots of oil production cuts over the last year. So I expect these companies to continue making money. And on days like today, where tech is rallying, interest rates are down slightly, do the unpopular and buy the energy companies. Seems like it's a pretty good bet going into the future, into a reopening economy with a good stock that is highly correlated or produces a product highly correlated to inflation, which is a thesis I and many others have, and you should probably have, given the massive increase in the money supply. And you can believe inflation is going to occur without believing that the economy is going to strengthen. There's something called stagflation. If you took any economics classes, we discussed this a little bit, and I would definitely familiarize yourself with stagflation and the notion of inflation. Stagflation isn't as good. Unemployment rate stays low, even though that hasn't been the case. It has risen, and inflation occurs. I think what's more likely, if they get some sort of infrastructure package and the economy rebounds properly, is that we have a productivity and economic rebound induced inflation, which is pretty likely. We'll see what happens though. We'll see what happens. So don't sleep on energy stocks and other cyclical stocks, but particularly energy stocks. I've liked this sector. It was one of my 2021 trades, going back to my now deleted Instagram videos around the turn of the new year. Energy, gold, real estate. Today, well, real estate's done very well. Demand is certainly there. We hear about energy. We hear about mining companies. This is still the 2021 story. We are very early in 2021. We're still very much in a 2020 kind of zone, although we are getting close to the end and the beginning of the full force 2021 forces. So we will see what happens. And until next time, peace out.